Hello there, Maverick Traders. This is Rob Reinhold. Joining me is Darren Fisher, as always. This is the Trading Room, and here we are going into Thanksgiving week. So we are looking at a holiday-shortened week. So let's jump into the week we just had. The week we just had was a pretty messy week, and there were lots of gaps in the morning, either gaps higher, gaps lower, but in the end, we didn't go anywhere. And that was kind of what we thought was going to happen, because remember, the week before, we had a massive run in the last 2 days from the CPI report. Now, let's talk about the PPI report, because we got the PPI report this week, and the PPI report came in really tame as well. 0.2 on the headline number, 0.0 on the core number. This pretty much backs up the CPI that at least last month, inflation seems to tame down. Darren, what do you think about this PPI?
Yeah, I mean, I've been really hawkish on inflation. And, I've kept saying that the Fed has needed to get ahead of this, long before they did. I almost have to concede, though, that I think inflation has peaked. We're still going to have it. Yeah, don't get me wrong. We're not going to go to right back down to a 0 to 2% inflation number. We're still going to have inflation. It's just not going to be as bad as what I had forecast. So I think we've hit the peak and we're on the downside. And I think the Fed needs to keep doing what they're doing to keep it under control. But I don't think we're in the risk of runaway inflation anymore.
Well, you mentioned the Fed, and on Thursday, we heard from Fed President Bullard, and he was hawkish. So the market had gotten this good news from the CPI and the PPI and was kind of feeling good about it. And then Bullard, who's actually been one of the more dovish ones, he gave a speech. He said, look, we need to have more restrictive policy, and we think we need to get up to the 5 to 7% range. That's much higher than the market expects. The market expects there to be about 4.5 to 5% on the high end of the range. And all of a sudden, Bullard's talking about 5 to 7. The market did not like that at all. However, the market did come back after his comments. His comments set him down. We gapped lower. And Thursday, we actually had a green candle on Thursday. So the whole week was really messy. And let's just finish off with the other reports. Retail sales came out much better than expected. So look and see what we have. We have this push and pull. Philly Fed comes out at negative 19. That is such a terrible number. And manufacturing is a leading indicator. So you've got this leading indicator that's getting much worse. You've got this current indicator, retail sales, that's really good. It is definitely not clear to the Fed. And then you take a look at unemployment claims. People still are fully employed here in the U.S. So when you take a look at what happened in the market this week, we were looking for a flat market, and that's pretty much what we got. Dow was flat, S&P was down 0.2%. We've been saying the NASDAQ is likely to underperform. Sure enough, it underperformed quite a bit, down 1.1%. Take a look at the loss in oil. It was a big loss. We're going to take a look at a lot of energy stocks. They did very well this week, in spite of oil just being crushed. If we take a look at these charts, I really want you to focus in on these last 5 days. All right, these last 5 days. Let's take a look at this day by day. Monday, we gap down, run up, and then sell off. Tuesday, we gap up, run up a little bit, and then sell all the way off, recover, gap down, sell off, gap down, lots of buying, gap up, and a little bit of a sell-off. It was a really hard week for anyone who was doing any sort of 1, 2, 3 day swing trading. This week was a very frustrating week. But I want you to see that all of this simply happened in this high base. We had this low back here, we had a big run, and we've just high based. So ultimately, this support at 390 held very nicely, and this market still is showing us some bullish price action, even though those were 4 pretty bad candles this week, and then we only had 1 green candle. We come over here to the NASDAQ, really same thing. We had a big rally off the bottom. Is this a pullback? Is this a base? It's somewhere in between, but we are still above the 20 and 50. Everything still looks good. And if we come over here to the VIX is showing that there's really no panic here. There's not complacency, but there's not panic. What you're calling the VIX here, Darren?
I think that's what you have to say. It's cautious optimism is what the VIX is telling me right now. Many fewer people are hedged than what they were before. I mean, it's not nearly as complacent as it was back in August. I mean, you could see. I mean, the VIX got down all the way down to 20, and then the market just got slapped in the face. I don't think I hesitate to say this, but I think the portfolio managers have maybe learned a lesson or two this year that they could get cut off at the knees at any time. So I think they're going to be less aggressive to the long side, but they're not going to get as complacent as they did back in August. So I think this is the baseline. This 23 to 24 area is going to be the baseline for the VIX for the next 5-6 months.
Hey, Darren, do you think a lot of the big funds have pretty much packed it in for the year?
I think they have. If a lot of them, if they've been long only, have already taken it on the chin. And so they're going to be doing a lot of window dressing. They're going to be paring their portfolios down and really probably only holding on to the stuff that's been strong. I mean, nobody wants to go into the end of the year with a bunch of dogs on their books. So I think, but at the same time, there's not that much time, and we've got 6 weeks to the end of the year. If they can just hold out and not take any more losses, then I think they'll be happy. They'll have an excuse this year. Well, everybody took a loss this year, so we just need to manage our loss to make it look not as bad, so I can still get my bonus. That's really where I think nobody's going to go out on a limb here in the next 6 weeks.
I totally agree. And usually at the end of the year, you get what's called performance chasing, where people are trying to make up that last couple percent to get better than their benchmark. I don't think anyone's sticking their neck out for the rest of this year. I think people are very happy to say, hey, the S&P went down 20%, we went down 17%. Let's pat ourselves on the back for a job well done. Let's look forward to next week. So let's talk about this week. We have a holiday shortened week. The markets are closed on Thursday, so full day on Wednesday, close on Thursday, a half day on Friday. This is the week with the highest win percentage, meaning that this is the 1 week of the year most likely to be positive. That being said, it has one of the lowest overall gain percentages. So this week is the most likely positive week, but it's not that big. I think that is really setting up nicely for what is likely to happen this week. We have a very mildly bullish market. We're going into a week that is very highly likely to be mildly bullish. I think that's exactly what we get, a very mildly bullish week. We are going to probably get a wrap-up of the elections. Now, I swear 20 years ago, elections used to be done in a day. Now it seems like they're done in a month or two, or sometimes never even done at all. But I think we will have a resolution, and a couple of news agencies have already called that the Republicans will win the House. So divide a government, and then we can just close this election and put it behind us and go on. This week, we really don't have a whole lot this week. I'm going to say the most important thing this week is on Tuesday, we hear from lots of Fed speak. This is what's moving the market right now. And then on Wednesday, we get the FOMC meeting minutes. I think these are going to be the most important things that happen this next week. And then, as I said, we close on Wednesday at regular time, close on Thursday, half day on Friday. I think that this is going to be a fairly mellow week. So our outlook is a +1 for the week. I think we're up somewhere around 0.5%. What do you think about that call, Darren?
Yeah, I mean, this whole market action this week, it just reminded me of the market is just digesting conflicting news. And I think you're right. I mean, you have to be bullish. You're above the 50, you're above the 20. But I don't think you need to be very bullish. So yeah, I'm for the 3 real days of trading this week, I think we float up, maybe 1%. And then, Friday's going to end really quickly. You're just going to see floor traders twiddling their thumbs for the first, until 1 p.m. Eastern on Friday, and then they can continue their Thanksgiving weekend. So yeah, I don't think we get a lot of volatility this week, but I think we do just drift up. So taking a look at some of the sectors, a couple of changes, nothing real big there. you can see we didn't have a whole lot of movement right there. I mean, the best performing utilities right there, and the worst was consumer. Okay, consumer's not surprising. They've been looking a little shaky for a while right there. But everything else, just down, 1.5%. That's it. Healthcare was up as well. Everything else is just kind of, meandered slowly to the downside. And with the market action that we saw, it's no doubt about that. Taking a look at utilities, we had utilities at a 0 last week, and now we're at a +1. And you can see we're firmly above the 50 right there. Well, we just came above the 50 right there, and this was more a correction over time than it was actual action. So we're up there, and I think we meander up. That's probably the best way to say it for the next few weeks. Is utilities is looking decent. There's probably there's a few things in there that would be good to go long, but this is not one. This is not like we saw several months ago back in August, where this is one of the outperforming sectors. And you don't usually see that from utilities. So I think utilities goes back into more its traditional plod along mentality for the next several months. But mildly bullish right there. Looking at communication services, we're to 0 in communication services. We were to 0 last week as well. Tried to make a little bit of a gain on let's see, what would that be, on Tuesday, and just kind of meandered back down. Right into a range. I mean, we're in this range right there between about the 48 and 51 level. You can see right there, and I think that's where we stay. I don't think there's so many people have been hurt this year through communication services that I don't think they want to be aggressive in going long. There's nothing that looks good enough from a fundamental level that they say, I'm going to place a big bet on this. So I think they hold what they've got. I think we're going to be range bound here for another several months. Communication services, real estate, not a +1 on real estate. A little bit of life there. You can see we had that nice big gain last Friday. And, even though we did come back down to that range, we still held at least half that gain. So mildly bullish. You can see the long lower shadow that we had on Friday right there. I think we drift up. It would probably be the best way to put what's going to happen in real estate. Industrials, again, looking really strong. Now, I've got a +2 on industrials. The only reason I'm not even more bullish is because we haven't broken through that resistance that we set back in August. Looks good. I'm still bullish on this, and I will get even more bullish once we can break through that. But the tea leaves are telling me we're going to hang out here for a little bit, and I don't expect a whole lot of movement this next week. So we'll reevaluate the week after Thanksgiving, and you'll see where we go from there. But industrial is still looking really good. Healthcare. And same situation, a little choppier in healthcare. I mean, you could make me the case that, well, we're slightly above it, the previous high right there. Not enough for me to say, yes, breakout time. Okay, you can see it's a much choppier action, still bullish overall, but really choppy action in the last couple of weeks right here. So I'm bullish, but I want to see a very concise break above that resistance before I say, okay, game on, +3. Financials, same thing. Not as choppy as what healthcare was, but still a little bit of action right there. It came down, still held most of the game. I mean, we're just in a high base right now. And again, I think we just based, I mean, these sectors are leading things, but I think they do take a break. But once if the markets go to the upside, I think these three sectors are the ones that lead it. Industrials, healthcare, and financials. I think they're the ones that are going to lead the charge if we can get enough momentum going to the upside. Consumer, got a nice firm 0 on consumer right there. You can see it was the worst performing sector, and for the week, just couldn't hold the gains that it made last week. I mean, we're pinned between the 50 and the 20 right there, and with the possibility of going lower. But again, I think we just base. We base right here. It's going to be a low base as far as consumer goes, but I'm not expecting a whole lot of movement one way or the other. Tech looking good at a +1. right there. It had a lot of damage taken to it. We finally broke out of the recent swing high, went back, tested what resistance became support. We're above that, mildly bullish on tech. Materials, got +2 on materials. It's not as pronounced as what I would say industrials, healthcare, and financials are, but it's still looking pretty good. So we had a nice little bull pullback right there. A long lower shadow on Friday. It's definitely bullish, but we've got to break through those August highs before anything looks really good. But there's a lot of good stuff out there in materials. Especially find stuff that's in a base, and let's play it as it's in a base. Energy. We see energy right here. I'm actually a little less bullish on energy. It was at a +3 last week, and now I'm at a +2. You can see it's been doing really well, but this week it pulled back. Now we're sitting right there at the 20-period moving average. Now technically, this is still a bull pullback, but by no means am I going to get short energy here. It's just performed too well. It's just not performed what you would expect. The Olympic level performance of a +3 that we've come to expect right here. So nice little bull pullback here. Still bullish, just not as bullish as I was last week. Nice +2. We're probably going to get some basing action in here as well. So to rack and stack everything, neutral on communication services and consumer, mildly bullish utilities, real estate, and tech, +2s on energy, materials, financials, healthcare, and industrials.
Hey, Darren, I want to just pop in and say, have you ever been less enthusiastic about +2s?
I don't think I have. In any other year, +2s, we'd be looking at, really, aggressive diagonals, maybe some, $5, $10 spreads in verticals. And right now, everything is just so, pressed against the resistance that the August highs are providing right now, with no real impetus for the broad market to push us over. I mean, it's a +2, but in a year like this, you're just like, yeah, I'm going to wait and see.
Let's call it a +2 blah.
Yeah. So let's take a look at a few of our other trades. So in utilities, last week we were sideways to long on energy. And this just, it's still in a range, but it's at the lower end of the range right now. This was down almost 7%. Probably, it looks like it wants to bounce back up. And you look at Friday's candle right there, it looks like we put in a nice bottom, probably going to come back into the range that we were looking at. But this one needs another week or so in order to get back into profitability. So this week, we're looking at something sideways to bullish. This is OGE Energy. And what we're going to do, and you can see it was basing quite nicely, broke out of that base on Friday, right there. So I had some good momentum right there. This looks like it wants to keep going higher. So go long the monthly December 38s. And then we're going to give this a trade 2 weeks to go. We're going to short those December 2nd $40 calls against it. So little mini month diagonal right there, long the 38, short the 40, and give it 2 weeks to play out right there. I think we make a little bit of money on this one that way. And communication services, last week we were short Meta, and that was down 0.86%. So bear rally kind of holding in right now for at least last week. We've got some more time on this trade, so we'll see where it goes. It could just hold out right here, but if it wants to go back down, then I think we're looking pretty good. We've got a little bit of time to let this thing play out. This week we're looking at Twilio short. You can see classic bear rally right there. It went up there, and that was Tuesday. It hit its high, rolled over on Wednesday, and so that would have been your confirmation day. This is still looking really good. By all means, there's no reason not to get into this trade. So it depends on how you want to play it. I would play this simply as a December 50-55 bear call spread right there. Now this is more going to be sideways to slightly down. I mean, we're sitting right there at 49.25. You're selling at the money, so this is going to be a very nice theta positive trade for you. I would want to make sure that I could pull at least a $2.50 credit out of this before I get in there, just to make it a one-to-one reward risk. But if this thing just keeps going sideways, you still get paid. If it stays below 50, you're at your max gain. So looking at Twilio to the downside right now, or sideways. And healthcare, last week we were long Pfizer. That was up 1.32%. So it's still sitting above, it broke out, came back to that 48 level where we've got some nice support right there. And, give it a little bit of time. It looks like it wants to keep going higher. We just want to see a little more movement out of it to get lock in a nice game. And again, we've got some time on this. So this is not looking bad. It's just not looking wow. Right now we're looking at Moderna sideways. And you can see we're still below those August highs right there. And you look at the action this week. We had the previous, Monday we had a really nice update from 170 180. I mean, it looked really good. Now right now we're holding at that. We broke out from 150. So this has come a long way right here. You had a 20-point move. Looking at it. But right now we're above that 180 level. I think the 190 level is going to provide resistance right there. So I think the best way to play this is just play it sideways.
Moving on to industrials, this is my favorite sector. I like this one the best. I think it's showing the most strength. Last week we were long Honeywell, and Honeywell kept chugging higher. Look, it wasn't a sexy move higher, but it was a nice little 1% move higher. Okay, this trade's working out fantastically. Everything we want to see happen has happened. Remember, this was a down week, and Honeywell still had an up move. Definitely liking how this is going. This week, we are taking a look at Johnson Controls, another really strong stock. This is one of the mistakes I made as a young trader, was that when I saw a stock like this, I thought to myself, oh, I've missed this one. It's already gone too far. Let me get the one that hasn't gone anywhere yet. What happens is that one doesn't go anywhere, and this one keeps on moving. So we're not going to make that mistake. We are going to look at relative strength and say, hey, this is where the money's going right now. So 68. I love to make these trades here. Just a really easy 65, 68 diagonal call spread. We're not really asking this to go higher. All we're asking this to do is not go lower. We just want this thing to stick up around here. If this thing takes off and runs up to 70, okay, we don't make quite as much money, but we still have a nice gain. If it hangs out here at 67, we still have a nice gain. It's just when we goes down a little bit too low, this is where we say, okay, we no longer want to be in this trade. Let's get out of it. So this is a positive theta trade with a little bit of delta. These are the kind of trades we want to be making. We're not looking to stick our neck out because we don't think the direction is going to be really strong to the upside. We think it's going to be a very small, very mild walk upwards. In financials, we had a sideways play. We've been playing a lot of sideways trades in financials, and this one did exactly what we wanted to. It was only up 0.04%, so nailed this one on the sideways. And let's go ahead and take a look at something a little bit more bullish in the sector. This week, we're looking at Apollo Global Management. This is basically like a BlackRock. These are companies that go out and buy other companies. And you can see we had a nice, huge run here, pulled back, found some support right where we wanted it to. I would have loved to have seen a green candle on Friday. That would have been like a cherry on top. I don't mind this candle. It's still a bullish candle. Still tell me it went up. The question is, how high can this thing go? I'm looking at 66 is very likely to be a little bit of short-term resistance, but once we get past that, it is really clear sailing. This one is looking very, very strong. So if we give ourselves enough time, I think we can just go out to 60, 65, or you could even take a look at maybe the 65, 70 based on where this stock is trading on Monday. I think you just want to give yourself enough time to let this one work out. So right now, the market is a little bit more bullish than bearish. We want to be a little bit more patient on our bulls and a little bit less patient on our bears.
So in consumer, last week we were sideways in KDP, and you can see it did exactly what it's supposed to do. This thing, moved 0.1% over the course of the week. So this is looking pretty good. I think we got a week left on the trade. This is one that, if it starts to get out of the profit area, just take the profits and move on. But for a sideways trade, we couldn't ask any more of this one. Right now we're looking at sideways. Again, we're playing a lot of stuff sideways to slightly bullish. This is HOG, Harley Davidson. Let's play this one sideways. You can see it's had a nice run, but it looks like 48 is going to be the resistance right there. And so again, let's just play it that way. So what we're looking at, we're playing the 45, 47.50 46.50. So this is only, 2.5 points either way, and sitting right there at 47.50. So that's your midpoint right there. We don't think it's going to get out of this area. So put on a nice call butterfly on that and let it run for 2 weeks and see where it is, and then take it off. I think this one looks like it wants to base. We're not expecting a whole lot out of the bullish to the upside. So let's let it base and take advantage of it. Great thing about using options. In technology, last week we were long IBM, and IBM performed for us very, very nicely. It was up 3%. You can see Thursday had a nice bullish engulfing candle right there. Friday had a really good confirmation as well. So this thing looks really good. It looks good to the upside. We've broken through the August, the July's high right there, and so this is clear sailing. We have a lot more upside. It looks like that IBM wants to provide us. And it's weird. IBM has been around for so long, and we're used to it not moving a whole lot. This year, it's moved a ton, both to the downside and the upside. It's just it's not one of those new, fresh names. I mean, this company's over 100 years old, and this is where the money's going. I think this is indicative of where people are looking. We don't want the fresh new thing anymore. We want someone who's weathered a century's worth of volatility, 2 world wars, technology revolutions are still around. This is where I think the money is going. We talked about it last week. This looks very much like an 80s bull market and where the money is going. So if that's where the people want to put the money, that's where we're going to put it into. Right now we're looking at DocuSign for a bear rally right here. And it came up there, confirmed this week. Just couldn't make it. It was briefly above the 50-period moving average, rolled right over. Now it's firmly below the 50, and it's even pierced below the 20. This thing has a lot of selling pressure on it. So let's look at just something simple. 2 weeks out, December 2nd, 45.47 bear call, and you can see it's right there, and just very, very discrete area right there. You're going to get a good amount of theta out of this, plus a little bit of delta. As long as it closes below 45 2 weeks from now, then you're at the max game.
And I hope everybody is paying attention to, especially over the last couple of months, how we flow in and out of our trades based on what the market is telling us to do. Right now, the market is not telling us to be aggressive in any direction. So hopefully you've noticed all of our trades are not very aggressive. A lot of stuff close to the money, a lot of stuff with lots of positive theta. When the markets break out and run one way or the other, then we'll make adjustments. But the closer you can get your trades to mirror the underlying market and sectors, the better you're going to do. So last week in materials, we had a sideways on CTVA, actually long to sideways. So either sideways or bullish, and it was up 0.66%. So it basically did exactly what we wanted to do. It hung in the area, mildly profitable. This week, we're going to stick with the sideways trend. This is BHP Billiton. And you can see we have a lot of the same patterns here that we've seen on others. Coming up to big resistance, we just don't think there is the gas to push us through these resistance levels in a lot of these stocks and a lot of these sectors. And so the question is, let's use this and say, I'm going to set up a trade where basically I think it's going to fade a little bit off this level. It's not going to go down significantly, but it's just going to fade off this level. So I'll go out for 3 weeks, say, okay, you know what? 55 is going to be this midpoint. And the 50, basically you're saying we think it's going to be somewhere in this area in 3 weeks. We think it's not going to be able to break through because the market is just not pushing things out of resistance right now. And we think this is going to fade back down. Look, you can adjust this to be a little bit more bullish than this. You could look at something like a 54, 57, 60, and you could just move it up and be a little bit more bullish. You could have choose your option strategies, of course, based on your own personal timelines. In energy, I'm with you, Darren. I'm also backing off energy. I am definitely not going short. I'm not even looking to go short, but I don't think we can ask energy to run like it's run for a lot of this year. Last week we had Schlumberger, and I said that incorrectly, Schlumberger. That is how you say Schlumberger at Maverick. We don't say Schlumberger, it's Schlumberger. Old story. Not going to tell it today. I told it last time. We did get a little bit of a pullback. So we had a sideways to bullish trade on Schlumberger, and you know what? It's fine. It pulled back a little bit, about 2% for the week. Exactly fine. It works within our strategy that we had on. This week, we're going to go with some sideways stuff. Pioneer Development. This is a stock that has made a new swing high back here, but you can see it was not able in any of these runs to put any pressure on this 270 area. Another one that we say, hey, you know what? We think 270 is likely the cap. We don't think it's going to fall significantly, but we think 270 is a cap. So this is a great time to go in and say, hey, you know what? We can set up a butterfly or a condor or some sort of sideways trade. We basically say, okay, it's at 250. We think it's going to stay around 250. And we set up a trade that says, we think we're going to be between 230 and 270 somewhere over the next couple of weeks. And if it does that, it's a profitable trade. If for some reason it blows up to the upside or blows down to the downside, we have limited risk. We're going to position sizes for max loss. And, that will be one of our losers. Hopefully you can see the way we're structuring our trades, trying to mirror the underlying market. If you have trades that you'd like to share with the rest of our Maverick traders, please go onto the Maverick Trading website, log into the members area, and let's get us all sharing ideas with trading. I know that there was a lot shared last week, a lot of good ones. Let's keep it going this week. To wrap this up, there's really no clear direction here. Yes, this is likely to be a mildly up week, but as I said to Darren, I've never been less excited about +2s on a chart. I mean, there are +2 blahs. So I think you just have to be reasonable. One of the things we always say at Maverick is trade the market in front of you. The market in front of us is not an exciting, rip-roaring bull market or bear market right now. It's just kind of hanging out. So make your trades based on that market analysis. Only trade the market in front of you, not the market you want it to be, not the market you think it should be, but the market it actually is. And we're getting a +1, +2, very unexcited market. Remember, this is a holiday shortened week. We think tech is likely to continue to underperform. We're going to probably be saying that for as long as the interest rate cycle is going higher. One last thing to mention, next week is Thanksgiving week. Every year at Maverick, we take the week off. We give all of our staff the week off. So there will be no end-of-day videos. There will be no live sessions. And we will be back that first week of December after that. Everyone have a great Thanksgiving, and we'll see you later. Goodbye.
Good trading, everyone.